Okay, folks, welcome to Market Wrap. It's the 19th of April. Let's talk about building permits and housing starts. They were released today. The market had expected 1,170,000 new housing starts. We saw a big miss. The actual came in at 1,089,000, so a measurable miss. Now, that may be a one-off, but the problem here is that building permits, which is a forward-looking indicator, the market had expected 1,200,000 new home build permits. What did they get? 1,086,000, a significant miss. So this can impact GDP, which is just frankly barely hanging on by a thread to positive territory. So tomorrow we'll take a look at the existing home sales, not a market mover, but just an indicator of how this economy is truly behaving. It's inverse of how the stock market's behaving, and it's all about the Federal Reserve. Now let's talk charts. All right, so Intel after the bell today, they came out, disappointing numbers. Yahoo, it's not even worth talking about Yahoo. They beat, but they're being prepped for sales. So they sharpened their pencils to ensure that this was a good quarter. Now, we're taking a look at the Dow Jones Industrial Average. We gapped higher on the day, a strong day. We shrugged off. Remember, yesterday afternoon, you had IBM, poor earnings. You had Netflix, poor earnings. The markets were spiked higher this morning. At one point in time, they reversed. They were down, but the traders were able to rally them back. How is volume? Horrible. So we continue to see a short squeeze, algorithmic trading, moving the market higher, but there's no institutional accumulation. These situations do not end well. Take note of the proximity of the Dow Jones to the 3 standard deviation Bollinger Band in green. Very, very close. And we saw sellers move in, taking the Dow off of 18,100. So we did close again above 18,000. So while price action is good, volume action is not so good. Indicators look strong. We could still move higher, folks. S&P 500 daily chart, similar price action as what we saw on the Dow Jones. Volume rose today, but still below average. Indicators look good. Transports, daily chart, moved up and into resistance at 8,100. They backed off. Sellers moved in, sold at resistance. Volume continues to decline, below average. IWM, Russell 2000. We are trading up and into the 2 standard deviation Bollinger Band. This is not quite a doji star formation, which is a sign of indecision, but it's close. At one point in time, we were down on the day. We did not recover like the Dow Jones and S&P 500 did. Volume today, it rose over yesterday's 2016 low volume, but still measurably below average. Now remember last night, this is a 2-hour chart, I talked about some divergences that were setting up on the Russell 2000. I talked about how we were up and into this upper band of resistance on a 2-hour chart. It also coincided with the IWM on a monthly basis running into the upper band of resistance. What happened today? They spiked it up and through resistance, and then we had a breakout point failure, a bull trap. Bulls got excited. They moved IWM up and through the upper band of resistance, and then were clubbed like baby seals. Now, this is our tripwire here. This will tell us whether or not we're adding to the TZA trade. It did not break down below our tripwire. Take note of Stokes. This uptrend that began, let's call it actually back here, April the 6th, broke today. The stochastics have a double top breaking down. Volume to the close was good. So we're seeing some weakness on the 2-hour chart. Let's go to the 30-minute chart. All right, so on a 30-minute basis, lower high. We moved higher today, reversed, breakout point failure. What did we do? We pulled back, broke down below this lower band of support that formed April the 12th. Now what we're doing is we're probing. We're trying to recapture that support level. That support level should now act as the upper band of resistance. Do we go jumping in tomorrow morning, shorting the market based upon the charts I just reviewed of the Russell 2000? No. The reason why I'm going into such detail is that you're beginning to see cracks in the foundation of the Russell 2000. Take note of the lower high on IWM. Volume rose into the close. Remember last night I talked about lower highs on Ultimate Oscillator, lower highs on MACD. Does that mean we cannot move higher? No, it does not mean that. It's just an observation. We will not trade off of this. It's an observation that keeps us short of the IWM until the markets say you shouldn't be anymore. And I have more. Let's talk about the triple Qs of which we are short. This is a daily chart. Overlaid in blue, you have the S&P 500. Take note of how during 2015, the triple Qs outperformed the market. Even during sell-offs, they sold off less worse than as did the overall S&P 500. Now, fast forward 4 months into 2016, the S&P 500 is now trading above, beginning to outperform the triple Qs. Also, take note of the fact that on April the 7th, we broke this upper band of the rising uptrend channel. So while the S&P 500, Dow Jones, and IWM were higher today, the triple Qs were lower. That is a divergence. Take note of lower highs on RSI. I think that the triple Qs are probably going to break. They'll probably wait for Amazon's earnings. Amazon being so expensive, it had better be a blockbuster earnings announcement to keep that stock from falling, and it began to fall today. Take note of volume, rose well above average. All these charts I've gone over thus far, we've seen volume below average to the upside, yet on the triple Qs, we're seeing institutional distribution. So the question should be asked, where's the money going? It's going where we're already at, and we have been. It's going into commodities. It's going into energy. That's where it's going. Take note of Stoke RSI, rolling over, lower highs. Triple Qs are not looking good. 2-hour chart. All right, so 2-hour chart, we were in an uptrend channel. We broke down first on April the 7th, recaptured support, broke down again on the 11th, recaptured support. Again, we are back down below this lower band of this rising uptrend channel. The triple Qs are beginning to break down. Nobody's talking about it. This is what you learn by watching the charts. Take note of both lines on Stokes trading down below 50. Very, very bearish price action. And when you take a look at the SQQQ, of which we are long, here you have it. SQQQ puts you short of the triple Qs. Take note of RSI moving higher. So think about it. While the triple Qs have been moving higher and the SQQQ lower, its RSI has been making higher lows. Folks, this is the market sending us a signal. Now, I would be a little bit more excited about this chart were it not for the fact that stochastics broke down below the similar lower band of support. It didn't hold. So what we're looking for is a rollover and a higher low on Stokes. If we move back above this support level, I'll become all the more bullish on SQQQ. Take note of price action today. It's holding the lows last seen back in December. We did close off the highs of the day, so we're not going to talk up the chart just because we're long of it That's talking our book. We won't do that. So is everything perfect with SQQQ? No, by no stretch of the imagination. When would it be perfect? When we see rising up volume and we are moving up and through this upper band of resistance. Then we could talk accumulation. Now, I saw this last night, and I didn't talk about it, I should have, I guess, in hindsight. I was watching this. This is a 2-hour chart. I was watching this chart for a while, and I was looking at this declining pennant formation, and I decided not to talk about it last night because it was just gut, that I thought that we were going to pop higher. Sure enough, we did. So on a 2-hour chart, we're holding a breakout point. We broke out here. We pulled back, retested, rallied, pulled back. We're retesting it again. Now we're beginning to put in higher lows. Now we need to see higher highs. We don't have that yet. So it's not safe to go dipping our toes again back in the water on the SQQQ. But it's enough for me to say, you know what? I'll give it a little bit of room. Let's go to the semis. Weekday today. Expect them to get weaker. Intel. Disappointing numbers after the bell, laying off 12,000 workers. That's 11% of their workforce worldwide. Now, if this sector rallies, that's a tell. Volume to the downside was big today. Declining lower highs on Ultimate Oscillator. This is a sector that's breaking down. Lower highs on Stokes. I think we move considerably lower on the SMH. Energy. This is where the money's going, folks. Energy. A new high. We're going up to, let's call it 32.50. That's where resistance is. I think we're moving higher. USO oil. It blew off the Doha meeting and moved higher. Oil wants to move higher. The dollar is correcting and correcting hard, folks. That's going to send commodities moving higher. Volume was weak. Stokes are hooking up. I think oil moves higher. Here's the VIX daily chart. Attempted to rally, failed, held support. Take note of your Stokes beginning to bottom out a little bit, beginning to level off. Same thing with Stoke RSI. And remember last night I mentioned RSI beginning to level off and put in another higher low. But last night I mentioned that we didn't have a breakdown below the lows seen on the 6th of April. Today we closed down below it. So we will be keeping an eye on the TVIX. This will put us twice long of volatility if and when we decide to get back involved with it. It tried to rally today, failed. Well, it did rally today. It didn't fail. It closed off the highs of the day, well off the highs of the day. That's why I have a sound of disappointment in my voice. Is it close to being a buy? Sure, soon. Not quite yet. 2-hour chart. Yeah. So here's our pop. Do we break down and make a new low, or do we put in a higher low? I would rather wait until we see a breakout. Let's update this chart. Get ready to jump back into the TVIX. All right, so here we have an updated 2-hour chart. You can see that we are in a descending pennant formation, upper band of resistance, lower band of support. Now, this lower band of support acted as resistance for a long, long time going back here. Take note. Now it's acting as support. That's good stuff. Now what we need to see is a retake, a recapture of this upper band of resistance. That's when we'll start thinking about building a position in the TVIX. We want to be very, very disciplined because we know how volatile this issue is. So we want to respect it. Double bottom setup on Stokes looking rock solid, looking really good. So we may be long of the TVIX fairly soon. The banks moved higher today. Yields moved higher. Banks are moving higher. Goldman had disappointing numbers. They moved higher. The banks are going to move higher as long as rates move higher as well. 10-year yield moved higher today. I just mentioned that. We won't spend much time here. Here's the dollar, folks. Let's go to the weekly chart. We'll come back to the daily chart because this is serious stuff. So here's last week's bullish week. Now we are probing the lows of support. Last week we managed to hold on to that support level. Right now it is not looking good. And if it breaks the support level, you are going to see commodities rip through the ceiling. Back to the daily chart. So while we could focus on what might be with the weekly chart that we might break down below the weekly support level, let's focus more on the daily chart. Now, last week, remember, we had a breakout above this upper band of resistance, which failed. What I always try to teach is that when you get that, when you get a bull trap, the probability of retesting the lower band of support is about literally 90%. The probability of breaking that lower band of support on an individual stock especially is greater than 50%. So we did that today. We broke down below this lower band of support. I was skeptical. I was skeptical last night about whether or not it would happen because of the price action on some of the commodities which had stalled and consolidated. I didn't know whether they were going to break out or break down. It all depended upon the dollar. The dollar broke, commodities rallied. Simple as that. Now we need to see whether or not we break down below 93.62 and put in a new low. That would be a confirmation breakdown. That would put us down to new weekly lows. That will have commodities ripping through the ceiling. LABU, we booked profits today. We may be back involved. I just didn't like the price action inside day. No new daily high, no new daily low. It should have seen a follow through. It didn't happen. I'm worried about this market. I'm worried about the health of it. Believe me, I am. That's why I still have a short position. I'm willing to carry a loss on it. That's how adamant I am about this market. And I believe that it could still move higher. I'm not being overly aggressive with our short position, but I am concerned. When you take note of the stochastics, you're seeing a lower high on LABU, lower high on RSI. That shouldn't be happening. Volume rolled in very high. First out, best out. Book our profits, raise cash, and we'll live to play another day. TZA, interesting day today. I talked about this last night. Let's talk about the daily chart first. We have not quite a doji star formation, but enough to say this is an indecision day. Can we move down to the 38.40 level? Sure. I kind of expect that we will. That's because it was prior support. Traders are OCD. They like to retouch prior support levels. Volume to the downside rose today, but we were only down about 1/3 of a percentage point. Not a big move down with this kind of volume. So what does that tell you? Churning. You have buyers that are moving in, buying the dips now, and they are bidding the shares back up. They'll stay long of the market, but they're also going to begin to hedge their positions using the TZA. Take note of Ultimate Oscillator. We're making new daily lows, yet Ultimate Oscillator is still putting in higher lows. No confirmation there. Stokes are like a coiled spring. We need to see another push down on the TZA and then a bullish key reversal on the day. We almost had it today. We almost had a bullish key reversal. It didn't happen. Right now, as far as I'm concerned, we have resistance at 40. But we came very close to a bullish key reversal. Let's talk about the 2-hour chart. 2-hour chart, we broke down below the lower band of support. Then we had a bullish key reversal late morning. And we held this lower band of support. Now, if TZA were in an uptrend and it had corrected and had price performance like this, I would say buy it. Buy it in a heartbeat, add more in a breakout. We need to be a little bit more disciplined in our approach. I already have a position. I would rather buy on strength. Yes, I'd like to pay more for being right, and the probability of making money goes higher when I'm buying on strength. So that's what I'm looking for. I'm looking for a breakout Let's update the daily chart. All right, so here's our primary uptrend line, and here is our secondary downtrend line. I would be a buyer on a breakout and a close above this secondary downtrend line. When would I add more? On a breakout and a close above this primary downtrend line, and hopefully above $42 per share. We close back above $42 per share. That's significant. So TZA, while I would not buy it yet, close. We have a game plan for adding to shorts. URA, uranium, I think we move higher. If you haven't bought, you have a reversal day today. I would buy on a move above 1603, which marked the high back on April the 15th. Volume was light. I still think we move higher. All right, Nugget, NUGT. New members, this puts you 3 times long of the gold mining names. Extremely volatile. We bought again yesterday. We have done outstanding this year with NUGT. I simply love the name. So we bought more yesterday. We gapped higher today, up 14.37%. Closed above $85 per share. Made a new high for 2016. We closed down below $90 per share. That was disappointing because I think that had we closed there, I think that 105, 106 would have been the next resistance level. Folks, I think that we're going a lot higher. What I'm hoping for is a pullback and the filling of this gap here between the high on the 18th and where we open today. If we fill that gap, I'll be a buyer of NUGT. I'll be watching the intraday chart, making sure that it's an orderly pullback, but I will be buying more. I think that we are going a lot higher, especially if the US dollar breaks. If we break down to new weekly lows, NUGT, gold, silver was outstanding today. It moved extremely high. I think they're all moving a lot higher. Take note of RSI hooking up. Volume was below average. Would like to have seen it higher, but I'll take it. Indicators are looking good. Stokes are looking good. Now, just to recap this chart from last night, you remember this is how we looked last night. I mentioned I didn't know whether or not we were going to break out or break down. We had lower highs possibly getting put in on RSI. We held along. We did not get aggressive with our buying. Fast forward to today. Let's update the chart. There's your breakout. I mentioned yesterday that it was going to break out either to the upside or the downside in a ferocious manner. We got it. Now, that all being said, we had a huge move higher, obviously. This is what we want to see. We want to see it pull back, fill the gap. Could be between 81 and $80 per share. That's when we'll look to add more. It'll probably fill that gap quickly and then move higher very rapidly. So keep an eye on your email. Potash. All right, I know a number of you are watching this. You wanted to get long and you wanted to know if it was too late. No, it's not too late. I wanted to see how it closed. What matters is not where a stock trades intraday. What matters is where we close. And I didn't want to start responding to emails so close to resistance until I knew whether or not it was going to close above it. So we did close above it. I think that potash can be bought. I think that we're going significantly higher. Ideally, and this is what I've been trying to teach, is that you buy on the breakout. Here is where the opportunity was to buy more and then add more on the retest of the breakout. Now you're a little bit extended. I wouldn't be as aggressive with my buying were I to have bought back here, but it could still be bought. Volume, outstanding. I love the chart. I think it moves higher. PLG, this one got away from us. I wanted to buy PLG. It gapped higher, up 22% on the day, more than that. Volume strong. I think it's going a lot higher. Might we still buy it? Sure. We can put a intraday off order, an advanced order in at 280. Hope to get filled if they sell it off quickly. and maybe we'll get it. If we begin to flag out at some point in time, bull flag formation, we may buy it then. We'll have to use different strategies to buy PLG, but tomorrow may not be the day unless it gets a quick pullback and then it moves higher. That pullback is your opportunity. Buy the dips. I'm looking at Goldman Sachs, folks. Let's keep an eye on it. Let's update this chart, daily chart. All right, so Goldman is on the verge of a breakout. They reported disappointing numbers. Earnings are in the rearview mirror. We can now look to get long of the name. It's making a series of higher lows. It bull flags out, moves higher. You can't argue with the markets. So what the markets are telling us right now is that the bad earnings are priced into the stock. So now we need to look to get long of the name. We will buy it on a close above a 162.50. You can buy call options. Let's take a quick look at the weekly chart. We're moving higher. We have resistance at 165. So I wouldn't be an aggressive buyer until we got through 165, actually 166.20. That marked the lows of September the 28th, the week of September the 28th. Let's go to a 2-hour chart, see how we're setting up for tomorrow. All right, so on an intraday basis, we're overbought. Expect a pullback on Goldman. Beautiful price action today. We'll watch the intraday chart, see whether or not the markets are giving us a good entry point. We may buy then, or we'll just wait until we get a breakout above 162.50 and a close above it. More importantly, a close above it, folks. And that's it. Remember, tomorrow is Member Stock Chart Request Day. Go to the Ticker Cloud, enter your symbols on the Ticker Cloud, especially you new members. And I will review your symbols tomorrow on video. Everybody have a great evening and a profitable day tomorrow. Be well.